Hi there, traders. This is Brad Gilbert with FX Market Insight for Monday, the 11th of January. All right, now let's just have a look where things finished up on Friday. Equity markets higher, right? What we had is, they're only, well, the Dow Jones and the S&P were slightly higher. NASDAQ up 1.28%. So that's sort of significant, bit of a risk-on situation. Now, that's been attributed mainly towards the US jobless numbers, right? That came out. The change in the non-farm payrolls, let me just bring you back to the actual data, 140,000. Now, this is much worse than expected. The prior number was 245. Now, there's no real polls here. You know, the numbers are so distorted that there's no sort of forecast. So they're just going off the prior. So that's a real big sort of kick in the belly to the US economy. The dollar's rallied, equities rallied on the back of, what that means is the potential for further stimulus to really kickstart the US economy again. You know, the lockdowns, the government blow-ups, everyone's sort of going crazy. So the US dollar not looking, US economy not looking great. Looks like the US dollar's back in as a sort of safe haven, right? So with that move in the equity markets, right, you'd be expecting a risk-on profile, but we haven't got that, right? The dollar block is going down and the dollar pair is sort of just edging higher. So that's a bit of a confusing one. Now, dollar CAD, the only other big data out, every second month, the Canadian employment numbers come out on the same time as the US numbers, and it really distorts things. But we had some really weak numbers there out of Canada as well. And all that did was create a huge amount of volatility. I'll just swing you over here. Especially on dollar CAD, right? You've got the US non-farm payrolls, you've got the Canadian numbers sort of neutralize each other, bad numbers on both sides. So it comes out and shoots higher, comes back to be where it is. Now, this is on the back of oil, which is now, back up here at 52, 53 bucks. You got to think dollar CAD pressure would be on the downside, but I tell you what, the mixed fundamentals is really playing a little bit of havoc here. So now what are you going to do? This is a situation. You've got to identify what's happening, right? Risk on profile, US dollar should be low. It's not, it's higher. That's a bit of a confusing situation for everyone. You can see the dollar index, it's slowly making gains. I'll tell you what, if the weak numbers continue in the US, we could see a real strong dollar come out of this, right? So let me just come back to the daily market insight. It might be a bit easier for me to explain. So once again, the US equity markets, right? The global equities stem from the US. Okay, strong numbers on the daily percentage change, month to date, still looking pretty good. That's a risk on profile. You would expect, if I just draw a line here, these pairs to be going down. They're not, and these ones should be going up. But what we are seeing is the opposite. These pairs are going sort of slightly up, and these pairs are going down. Now, this is as I said, if you're just sticking to the risk on, risk off profile, you're going to get caught out, right? You've got to identify what's happening. Is that profile in play in the market, or is something else happening? So this is where that sort of safe havens, you can look at these things like gold's down 3.36%. On the daily basis, Bitcoin's down 2.81. Now, Bitcoin seems to have, like, as I was pointing out last week, really come along as a bit of a US dollar or a safe haven situation. Now, the weirdest thing I find to be hard to accept is what's driving it. It's like the biggest Ponzi scheme, but it is out of control at the moment. This thing could have potentially huge ranges, right? Like up or down 10% a day is not out of the realm. Now, what do we got here? So market evaluation, how am I seeing things? Well, to start the week, to me, it looks like a bit of a tricky market conditions. That's because we do have a risk on profile in the equity markets. That's not flowing through to the currencies. So there's that disconnection. It's like the major currency pairs, I say Euro, Sterling, Aussie, Kiwi, 95% of the time they correlate, but occasionally they break down. So don't just stick rigidly to that plan. Identify that there is a risk on profile. The US dollar is rallying. That's not in play. Okay. So that's what you've got to, this is part about reading the market. So from this point here, the Aussie and Kiwi uptrend is stalling. Euro, you know what? It's got a really good setup for a break trade to the downside. What I'd like to see is, a few things line up, right? What I'm talking about there is I'd like to see the equity markets get hit and the dollar rally, right? That's a real good profile. And that's where I would be very confident getting short euro on a break to the downside. Sterling, like all those pairs, right? The dollar block, as they're sort of known, Aussie, Kiwi, Euro, Sterling, all sort of looking a little bit susceptible at the moment. And gold under pressure, oil, well, it's still going higher, but the odd one out there as well, dollar CAD with those Canadian employment numbers, it's a bit out of balance with with that connection, with that correlation with oil. And obviously just a little bit of an update there on Bitcoin. It's a little bit all over the place. So when you come back and have a look at, say, the major pairs, right, you can sort of, what you've got to try and do is you're matching up, say, the daily percentage change and the overall month-to-date change and sort of see where things are happening. Now, I left in there the 2020 percentage change. So you can see what that overall trend is. So the dollar index itself is slowly coming back, but you know what? Overall, it's still in a downtrend. You can see these long-term downtrends, how far away they are. Now, dollar CAD, I tell you what, it's not far from sort of going back up, right? It's only down 2.3% over the last year. I tell you what, that's probably the closest dollar pair to sort of really kicking into gear. The other pairs have got a bit of a way to go. And then you look at the bottom pairs there as well. Okay, Euro, Sterling, Aussie, Kiwi. They're still in uptrends despite just sort of drifting lower. Okay, if anything, the trend's your friend. You're probably looking to buy dips on the bottom pairs and sell rallies at the moment on the dollar pairs. But you know, it's pretty tricky when we've got such diverse, dynamic geopolitical stuff. I was going to say macro fundamentals, but the geopolitical situation still a little bit cuckoo across the board after that rampage last week on Capitol Hill. The jobless numbers. The good thing here, I think, the good takeaway is the US jobless numbers are being recognized, right? The macro numbers are coming back into play. This could be a really good sign. I'd like to get the US political situation done and resolved, get Biden in play, and let's get things moving along. Then all we've got to look at is this weird COVID situation or the lockdown. So then we're getting much closer to normal markets. The UK, EU Brexit issue mainly resolved. So we're getting closer to normal markets, and that's where I hope the macroeconomic fundamentals really do come back into play. It'd be nice to see. And that's pretty much it, guys. Bit of a tricky start of the week. I wouldn't be rushing in just yet. What you're looking for is very clear and decisive direction, and you want to know where that direction's coming from. At the moment, we're sort of ricocheting around after the US non-farm payrolls, weak numbers, equity markets rally on the back of potential more stimulus. And you know what? The dollar, probably expected to come off. It's rallied. So that's the confusing part. What we want to do is get some correlation there, things lining up with the dollar. Then you can jump in. I mean, even on the face of that, you can sort of see here the dollar pairs, dollar index, dollar yen, CAD and Swiss, a little bit out of whack, right? I know it's early doors for the start of the week, but that's the initial setup we've got. All right, guys, that's it from me. Have a good trade day. Cheerio.